Okay, today we're talking about how to build an agency into an ethical venture studio. I'm going to explain what that means in a moment. We'll explain what that means in a moment. And also, especially, how to turn broken pieces, which can be relevant in any economy, into something positive. My guest today is Clay Unicorn. I'll tell you more about who he is in a second, so stay tuned.
Welcome to the Smart Business Revolution podcast, where we feature top entrepreneurs, business leaders, and thought leaders and ask them how they built key relationships to get where they are today. Now, let's get started with the show.
All right, welcome everyone. John Corkin here. I'm the host of the show, and every week we have smart CEOs, founders, and entrepreneurs from a variety of different companies. And if you check out the archives, we've got Netflix and Grubhub, Redfin, Gusto, Kinko's, Activation Blizzard, LendingTree, and many more. And this episode is brought to you by Rise 25, where we help businesses to give to and connect to their dream relationships and partnerships. How do we do that? We do that by helping you to run your podcast. We are the easy button for a company, B2B company, to launch and run a podcast. We do three things: strategy, accountability, and full execution. In fact, we invented what some are calling the Wix of B2B podcasting. It's our platform, Podcast Copilot. And so, Clay, what I love about doing what we do through our company is being able to highlight someone like you who's doing interesting things, building interesting things, and share their story with my audience. So I'm really excited about that here today. And I know that that's important for you as well, to be able to share your story and pay it forward. So anyone who wants to learn about how you can do that as well, go to rise25.com or email us at support@rise25.com. All right. My guest today is Clay Unicorn. He's the founder and former CEO of Unicorn, where he served as the CEO and founder from 2013 to 2023, led it through a transition period, developing mobile applications and web platforms to focusing more real world problems. And now he's got what is basically become a venture studio, an ethical venture studio. We're going to talk about that because there's other venture studios out there that are operating in a less ethical way. And so, Clay, I'm excited to talk to you here today. And let's start with I got notes, checking my notes here, and you were selling warheads as a kid. How'd you get into selling warheads? I mean, you grow up in some third world country? No, I'm kidding. It's a candy.
Right.
You were selling candy,
Selling
right?
candy.
Selling candy.
Yeah.
Okay.
Well, thanks for having me, John. And yeah, it started, I didn't know what the word entrepreneur was. I don't think until like 21, honestly. And grew up in a really small town in rural Michigan. And yeah, I just, from a young age, I think middle school, high school, people bring in candy. I had warheads and people were like, "Hey, can I get one? I'll pay you 10 cents." And I'm like, "Oh, you're willing to pay? Sure." And so that turned into, just selling different candies, odds and ends out of my locker in school, and to dares. I ate worms on the playground one time. Made a whopping $25 off it. I just kept upping the ante with other people around me. So yeah, all before I knew what entrepreneurship was, I was kind of practicing it. I got into Pokémon cards. I would trade them and buy a pack and broker a deal. So
Yeah.
didn't know what sales one was. Still don't call myself a salesman today, but I was selling.
You found a need and you supplied that need. You satisfied that need for people that wanted candy or wanted
Supply and
Pokemon
demand.
cards. Yeah. And
Yeah,
energy
simple.
drinks as well, going to Costco eventually.
Yep.
And
Yep.
you actually got suspended for doing this?
Yeah, oh yeah, yeah. A lot of warnings that I didn't heed. So of course, it had to escalate to the in school suspension, and that happened a few times. So
It's
I was a
crazy.
good kid.
I've had a lot of guests on this show that have similar stories where they sold something. I usually joke that it's oftentimes selling candy in elementary school, getting busted by their teacher, and then it's weed in high school and getting busted by their principal. But there's so many people that have that kind of experience, and it's kind of, I mean, I can understand why, schools can't have kids going rogue and everything. But at the same time, it is kind of disappointing that, look at you now, like you're successful, you've started a company, you've employed people, you've put money back into the economy, you've generated real value out there. And yet these activities that you did as a kid were punished.
Yeah. Yeah, it's unfortunate. I mean, I think that a lot of schools are improving. Like if you look at what vocational schools are doing in particular, I think it's they instead of stifling that, they're redirecting, and more into vocations. And they start now, I think, in like eighth grade, and they do these like assessments and tests and help you like understand the category of careers you could go into. And so I think that there's solutions out there. They're just not entrenched in the public schools. And I think, for a myriad of reasons, right?
Yeah.
So,
Yeah. So your first company, adult company, so to speak, was Chosen Development. It looks like you started it right around the time of both graduating from college and around the 2008 crash, economic downturn.
yep.
So how did that come about? How did you end up starting this company shortly after graduating and not getting, a job like probably a lot of your peers were doing?
Well, I actually had a nice job. I started off as a junior designer, fresh out of college at $8, whopping $8 an hour. And I was making 35 an hour a year later. I had really quickly rose in this agency I started working for. And I felt stifled. I didn't know, again, still I was learning what an entrepreneur was, but I didn't know fully that that was me. And so a lot of my friends hadn't graduated yet. I only did the 2 years in college. I had been quadruply enrolled in high school. So, a lot of my friends graduated a year or two after me, and they were all struggling in the 2008, market to find jobs. And
Right.
we said, well, what if we did like spec work together? And we did nonprofit work and we did things for our community. And so we got some local celebrity around, like we did a big dog walk in the city of Lansing, right downtown. Everyone's in their suits, on their lunch break, and here's 50 college age kids walking dogs and getting them adopted. And
So wait, so
you
this
know,
was just simply an idea, like you didn't have many jobs, so your idea was let's do something that gets a big splash, gets a lot of attention, and maybe it'll get
exactly.
us a job or get us some attention. Oh, interesting.
Resume
Okay.
boosting, resume
Yeah.
boosting before it was ever meant to be an agency. And then I quit at the worst time. 2009. I was a little full of myself, young and arrogant, and thinking I'm going to just go out and go solo. I'm going to go all in on this venture Chosen and be the best agency there ever was. And we did good work, but we didn't know how to sell ourselves. We didn't know how to find clients and how to scope things. And so a lot of lessons learned from that. What I would call what was successful is it elevated everyone's careers, but ultimately was a failure as a venture.
And so it sounds like it was you and some other people.
Yeah, yep.
Yeah.
Basically
And
just a bunch of friends.
bunch of friends. Okay. And so were there some dark times then when you were struggling to bring in clients and, three or four of you looking to get paid?
Yeah, I don't think I wouldn't describe dark times for those couple years initially. I mean, business will always cost you some friendships at times and misunderstandings. The darkest was I'd hired on at an agency, moved out to Boulder from Michigan to Colorado to just desperate for work, and I hired on an agency out there, and I was fired for the first time and only time in my career because when I hired on, they knew about Chosen. They said it's not competition. Work 9 to 5 for us. Do whatever you want to do in your evening hours. So essentially, I was moonlighting my own business, but then that was getting some word. I was getting leads, and my name was going around town, and that was in kind of direct conflict with my employer at the time. So I would say the darkest of times were, when essentially I'm at an ultimatum of I'm being fired and also risking, some issues if I don't, quickly dissolve and reassess my path. So
And what did you decide to do? You decided to stick with Chosen or what did you?
I wish I could say I took it on the chin. Instead I took it more like a bad breakup.
Mm,
Thank goodness for the founder, Jason Cormier. So this company was Room 214, and it's funny as we tell this story. I'll come back to this company in particular. But Jason was a great mentor to me. He was very patient with me. We dissolved Chosen, and about a year later, I reassembled what Chosen was and the friends and the staff and into a new agency.
got it. Sometimes you have to take a step backwards in order to take a couple steps forwards later, I guess. Maybe is that the lesson
Yeah.
from that?
It
Yeah.
is, and it also realizing that there's nuances when somebody lets you go that you see as a partner or as a friend or as a mentor. That sometimes there's things that just can't be spoken yet. There's underlying things and problems. I didn't know at the time. They couldn't tell us at the time, but Room 214 had lost its major accounts. Travel Channel had represented probably a third or more of their revenue.
Mm,
And so losing that account, Facebook pages were all the rage back in the day. Facebook was getting rid of Facebook pages or these
hmm.
custom tabs you could do. So I didn't learn that for many months after, and actually a lot of staff were kind of laid off in that same period of time.
That's
and
hard, right?
came
Because like
together.
you make these life choices and you blame yourself, and behind the scenes there are these other things, these other factors that you aren't aware of that are contributing to that. And so you maybe beat yourself up or blame yourself, and it's not fully your fault then in that situation.
Yeah, absolutely.
Yeah.
Absolutely.
Yeah.
And you just kind of band together. Sometimes I've learned that trauma bonding is a real thing. If you look into like PTSD and trauma bonding, you can realize that those psychological things that somehow we think are reserved for veterans and people who have been, at the front lines of warfare, that can happen in just everyday life through your business partners you trust, through, friends you trust. And you can suffer some real psychological damage. And the positive is when you can recognize that and then heal from it, recover from it. Then you have a framework to build upon.
Yeah. So you say that a year later you reassembled Chosen Development. Was that Array Creative?
That was, yep,
Okay. Okay.
yep.
And so what indicated to you that it was the right time to put the band back together, so to speak?
Yeah, so it was always limiting. I was really good at software, and all the staff I had were all software developers. I had a playbook back then, before I knew what playbooks really were. That was I would hire people from like construction or service industries, literally people at McDonald's, and I would teach them to code. And I
Hmm.
just looked for some key indicators in their personality that they possess the hard skills because I saw gratitude. When I tried to work with other rock star developers, the ego came with it, and it was so hard to manage and retain. And you shouldn't have to put in foosball tables and Xboxes in your office to keep a developer around. People should, maybe just
Yeah.
enjoy it or
Right.
be grateful for it. So it was a time where developers were in high demand. We were running one of the only dev agencies in Colorado, and but I thought, man, we're just still development's so limited. A lot of times that intertwines with design, and we need a good designer, or marketing and go to market. We need a good marketer. So I partnered with two business partners to kind of represent, be more of a three-legged stool: development, design, and marketing. And it went really well until it didn't. So,
What happened?
well, so basically, we started this venture. We became equal partners, and just merged. Two of them were freelancers, and
Are you talking
it
about
kind
the
of
PB investor, or are you talking about what you started
no, this would be Array. This would be
array
Array
event? Okay.
Creative.
All right.
Yeah, so basically I had two
So it's the
partners.
same people from Chosen.
No, these were kind of new people.
Okay.
Some were similar. I
Okay.
don't want to name names because
Okay.
there's no bad blood between us today. But yeah, ultimately three of us came together as founders. We merged these three kind of pillars together, and I was the only one bringing real capital. We had a profitable business chosen before that, so I
Mm.
was essentially doing a merger. Just taking all of my
Yeah.
previous assets and staff and merging it in. And that came with a bank account and savings, which
Mm.
was substantial to me at the time. It's like a quarter
Yeah.
million dollars,
Yeah.
but not
Oh, that's
substantial,
significant for startup funds.
Yeah.
Yeah. Yeah.
Well, and you're in your early 20s still, So
Yeah.
that was spent very quickly. I
Oh.
didn't put controls on it. I trusted my
Oh.
partners. We had the most amazing offices in Denver. I mean, hands
Mm.
down. We had
Oh.
Kid Cudi concerts. We hosted all kinds of events. We hosted like marketing get-togethers. Fire marshal came in and shut us down because we essentially had professional parties. Just
Uh-huh.
wild how much traction, but it was all fluff. It didn't necessarily convert to sales.
Mm.
And ultimately, regardless of our success in the market, we were not aligned as partners on what we were building and how we were building it together. So I was kind of the conservative one, and I had two partners that were far less.
So were
So
they the ones that were like, let's do a Kid Cudi concert? And you were like, okay, let's be a little bit more careful?
yeah,
You
basically,
obviously were
basically,
conservative if you'd saved $250,000, in spite
yeah,
of, you described Chosen as not being successful, but if you still had $250,000 in a bank account, there's some success there.
reasonably, yeah,
Yeah.
exactly. And so I guess take it with a grain of salt. When I look at it as failure, maybe I'm being my own worst critic,
Yeah.
but to me, not having a successful exit, I guess that's the thing in hindsight. I didn't know what exiting looked like back then. I look back with my modern lens and I think I could have done so much better, but maybe
Yeah.
that's what every entrepreneur does.
Yeah. Yeah. So Array was then eventually acquired. Was this kind of like was it an aqua hire? Was it you just decided, well, we need to go our separate ways, so we'll sell the company? How did that come about?
So we had an offer on the table from another larger agency out of Colorado, and they said, "Look, we're either going to spend. We need to we're gonna have capital gains this year. We either buy a building or we buy a business. And they came to us, didn't spend a lot of time on due diligence, and came to the table with a $3 million offer for our business.
Wow.
And
Were
so we
you happy with that
celebrated.
valuation?
That was great.
I mean, it
It was
only
great. I
been,
think we were doing
you've been
about a
around for a
million
year?
and a half.
The,
Yeah.
the
Well,
array had been around for a year?
probably
Yeah.
about 2 years at that point.
Okay. Okay.
Um, and yeah, it was a good offer. I think we are doing about a million and a half, maybe
Wow.
1.7 in
Yeah, that's
gross
good.
revenue. So it was a good multiple, it was almost a 2x. And yeah, so we celebrated, me and the other two founders, the night before signing.
Mm.
Maybe celebrated a little too hard
Oh
because
no. Oh no.
one of my founders decided he ended up going through the night. Next morning, he walked into the business deal and says, "We want 5 million."
Oof.
Just barges into their offices in the middle
Oof.
of their meeting and just
Oof.
says, "We want 5 million.
After
Take it or
drinking the
leave
whole
it."
night?
Yeah, and not
Oh.
sleeping, literally all nighter.
Oh,
You
jeez.
can imagine how
Oh.
quickly that deal was torn up.
This is like something out of a movie.
Oh, it could be. It was
Oh.
wild. Um, so our deal was torn up. We ended up fast forward. The band breaks up,
Hmm.
and we cobbled the pieces together. I cobbled the pieces together. So basically, I walked away. I was the first to just walk and just say, you know what? It doesn't matter what the value of this business is. That's a lot of hard work down the drain. I'm so
Ah.
upset, and I'm so ticked off. And
You've
so
lost your quarter
walked
of a
away.
million. You've lost the possible payday selling the company. Oh, you must have been so
And they
frustrated.
wanted it as an acqui-hire exclusively. They wanted our dev team. I think that was a big motivator for why there was maybe some animosity that was unseen between us as partners. I didn't know that. I think this partner was harboring a little bit of animosity towards me because they wanted our dev team. We were doing,
Mm.
before Shopify, there was like Magento. It's a very
Mm-hmm.
complicated platform.
Mm-hmm.
Very few developers knew it, and
Mm.
it was a specialty of ours.
Mm.
So,
Got it.
they didn't want his marketing team. He knew that, that we were going to be laying off, a dozen plus people if they acquired us. And so I know, it's like, I don't look at it. That's why I say it, I don't look back with bad blood. I realize that, man, if we had like counseling, to like unpack these things
Right.
as
Right.
founders, maybe that would have solved all that.
Would have helped. Yeah.
Yeah.
So how do you pick up the pieces? Because you end up starting your agency Unicorn later, not too much later.
Yep. Yep. So I sold it for parts. And
Mm.
the way that looked like practically is we had agency of record with some, notable, municipalities, government contracts. Getting agency of record is really, it almost is an asset by itself.
Mm.
With certain companies, especially publicly traded or governmental. So I started selling off that agency of record to, I essentially let it collapse to zero. And then I recovered it and sold it off kind of pieces and parts to other agencies.
Mm-hmm. Wow.
And then,
So you start Unicorn then, and this time, do you have a
yep,
partner?
this time I started without partners. I just
You
started with
started
a
without
collective
partners, but you eventually
without
got a
partners.
partner?
I did get a partner. Yep.
Okay.
It's an ongoing theme you'll find with me
How long did
anyways.
you go before you added a partner to this?
Probably a full year. And I would use the term partner like liberally with people because I wanted people to feel equal, but that didn't mean they had to be on the same cap table with equality.
Mm.
And that was the part I was kind of missing for a long time of how are you equal without being equal?
Yeah.
Um, so
Was there a
yeah,
part of you
actually,
that also felt some comfort in that, in having a partner?
yes,
Yeah.
yes. I would never be a great solopreneur or just sole. I can if I'm just freelancing and representing myself, but I've never been a good boss. I'm not great with like hiring middle management and bossing people around.
Which is
Very kind
ironic
of
given the definition of unicorn these days, what unicorn has come to mean, right?
right.
That you
Yeah,
actually are someone that wanted others around you and needed others around you rather than being like a solo all by yourself kind of thing.
exactly. Well, and to not have ego, but we were using the term unicorn before I think TechCrunch or whoever coined it for billion-dollar companies
Right, right.
coined it, and
Well, good timing.
before
Good use of
now
it. Yeah.
you couldn't find these on the shelves years ago. Now they're everywhere.
Yeah.
So yeah.
It's become quite a thing. In fact, I went to a conference 2 years ago where the theme was unicorns. It was in Seattle, and they were very proud of the fact that they had all these unicorns from there. So talk about some of you start that in 2013. So in terms of economics, it was kind of after the whole 2008, 2009 downturn. So economically, it seems like maybe a good time to start a company. And what are some of the highs and lows of building and running Unicorn? Because you started as a more of an agency model, building mobile apps and web platforms and stuff like that, and then eventually it moves on and you change the model. So talk a little about the early days.
Yeah, so early days, it was just very much. I watched a lot of my apps going on to be very successful, and make entrepreneurs a lot of money. And so I always had, I don't know what you'd want to call it, maybe jealousy or FOMO, but
Yeah.
thinking like, why can't I do that with ventures of my own? So you start to see, if you looked at my resume, in this linear progression, it's like 2013 to this 2015. You see me start dabbling in like startups, a fintech startup and other things, kind of in parallel. I didn't believe in like being a serial entrepreneur. Let me rephrase that. I've always believed that when people say serial entrepreneur, they mean parallel entrepreneur. And I don't think that that works really well. Moonlighting a startup definitely has its merits and works, but I think that to guarantee the success of a company and have the highest success rate, you have to be all in, and it has to just be your whole world. So there's a couple years where I started dabbling with, okay, wait, I can be an agency and service my customers, but I could be more exclusive of those are customers that I could be equitably invested in. So I'd never heard the term venture studio, don't know when that was coined exactly, but it was very much like what a venture studio model is now today, and kind of ubiquitous of that. But at the time, it was kind of unprecedented, unheard of. Out of the half dozen ventures I invested in, one was massively successful, and the other five were unfortunately duds.
So what
But
was the
there's a lot.
successful one, and why do you think that one was successful? What were the secrets
Yes.
behind that?
So it was a Bowery Valuation. Basically, we met these two founders, John and Noah, in New York. They were doing commercial comps for the in the city and boroughs of New York. They're like, there's all these disparate data sources to grandfathered variances and all these just different things. They're like, look, we have a relationship with Wells Fargo. They'll pay us to do these, and we can't keep up, and it's so hard to train. We're like, wait, we can build tech around that.
Mm.
So we did. So we essentially said, I don't remember the exact numbers, but somewhere in the ballpark of like they contributed like 50 to 75K. We matched it in terms of time, materials. And so for a net investment of like 150, maybe 175, we built an MVP, and somewhere between a proof of concept and a version one of the product that enabled them to raise $6.2 million in 6 months.
Mm.
And I think their valuation today is north of 500 million.
Wow.
So in effect, we were an angel,
Mm.
but
Hmm.
again, very much the venture studio model today, and
Yeah.
where we're taking that risk, and we would have just been out of pocket that cost, but yeah, we're able to pull it off.
And so looking back on that experience now, you said you had five that didn't work out. That one worked out really well. What are some indicators that you would look to evaluate opportunities now, given what you know? Was it the founders? Was it their charisma? Was it their work ethic? Was it the size of the opportunity? What was it the technology that you put into it? What do you think,
It's a
looking back on it
great
now?
question. Um, I'd say still learning always, because the market is always shifting. The one constant is the operators, the people. If you know that the people are determined, they're committed, and they're willing to stick it out for the years it's going to take, and they have the grit, um, that to me is the number one success criteria to measure against, because the
Mm,
technology shifts. AI tools are making it feasible to not even have development teams and to get to market quicker. Product market fit is important, but it's not everything. Ultimately, it's your founders and the
yeah.
operating team.
Yeah. Um, there's a little bit of a detour, but I know you've also been involved, had some equity stakes in brick and mortar companies,
Hmm.
businesses, a grocery store, a salon. What's it like going from the digital world building agencies to, you know, getting butts and seats, getting people to, come in the door of a brick and mortar business? What are some of the challenges that you've encountered around those businesses?
Well, I have to say my wife is my number one mentor on this. Again, my own ego and hubris of thinking, well, brick and mortar is going to be so much easier than running an online, fully remote digital company. So I've always just kind of taken profits and try to diversify where that goes in a meaningful way. That's how we entered into the brick and mortar space. My wife Hannah, she owns a salon. She started at a young age as well, like 23, fresh out of college, and she's been an entrepreneur ever since. And yeah, I mean, ultimately, I can't tell you what the success looks like because I haven't yet done a successful brick and mortar. What I can tell you is that it's way harder than I thought it would be, and it's definitely harder than doing a digital business, in my opinion, anyways.
Yeah, yeah. Um, you mentioned AI and how that's affecting the agency world. I want to ask you about that before we get to the shift to kind of the business, the venture model. But what do you see as the future for agencies that are affected by AI, especially like development agencies? How's it affecting things now, and how's it going to affect it in the future?
Well, I think in the immediate term, we're already seeing the results, which is as companies embrace AI, they're realizing they don't need as many humans, which is a bit unfortunate. I won't get into the philosophical of how do we solve that, systemically or as a nation. But what I will say is that the companies that don't embrace AI, I think, are going to be left behind quickly.
Yeah.
Um, and if you do it appropriately, like in our case, like coding AIs are not super sophisticated. There's a lot of room for hallucination, and it definitely does replace junior and mid-level devs. Like if I was a software engineer and I was only mid-level, I'd be terrified of the AI tools. As a senior engineer, I have the equivalent of like a five-person dev team
Mm,
underneath me at my disposal for for pennies on the dollar.
yeah.
I'm not scared of that. I love it. It lets me take more risks. It lets me create more proof of concept. So the number one takeaway would be embrace it. Don't resist it. Right.
Yeah, yeah. Um, and let's talk about the venture studio. So now you're at a point where you have another company, which is Scaffold, which is a unicorn venture. So it's part of Unicorn, and Unicorn is now more of a venture studio. So talk a little bit about what that is and how the model works now.
Yeah. So for the longest time, I'll start with what we learned about a year and a half ago, 2 years ago. I started with a thesis. I saw, the Silicon Valley Bank collapse. I was watching these trends and thinking the market's about to shift. And it wasn't just a COVID thing. It was, COVID just brought things to light and I think was a catalyst. So I sat back. I like to take my time again. I think conservative minded, and I wanted to redefine what a good startup would look like, or what incubating a good startup would look like into the future. And I'd worked with Techstars years ago, early on in my career, kind of fractionally and others, and so I saw what good incubators could do, and I had this idea for what if there was a framework like private equity firms, what they're really good at, the best ones, is like keeping a central ops team and using that ops team to like take off all the back office and admin, for example. That might represent 20% of time spent on a venture,
Yeah.
right? So if you could centralize all that, it's huge advantages. So I started looking around and thinking, well, that's cool. And then I heard this term venture studio as I'm talking to investors and private equity firms. I'm learning about some of the early venture studios, and I go and interview a few and talk to them, pick their brains, and what I saw was a lot of agencies still charging agency rates, but getting equity on top. Like when we did it, we were literally operating at cost. You could audit
Mm,
it, and we would pass flying colors of like we're in the black or the red, and we're truly doing this at cost. So we're shaving off the margin to be investors. A lot of venture studios are flexing either their fund or just kind of duping, I think, their customers with you know over exorbitant prices of like, oh, instead of 400 an hour for the agency rate, we're a 200 an hour rate. Their margin is still 20 to 30% for every hour worked. That to me was tragic. So we started calling it private equity studio, just to differentiate ourselves, that we don't want to be associated with that term. And Scaffold was our first product born out of that studio. So almost a year ago today, or just over a year ago, we
And what
went.
and
We've
what is
had
Scaffold?
Yeah, Scaffold. Thank you. Is it's basically a job procurement platform. So think of it as like LinkedIn for construction. It's very skills based, skills focused. We want to be what Zillow did to like real estate, and let you window shop. Employers should be able to come in and find exactly the trade they're looking for. We say construction because that's the vertical we're focused on right now, but you can imagine white collar skills, software engineers, you know how many layers of like a stack? You know, I'm a TypeScript dev that uses React as a framework, that uses Node.js, you know, like these are very specific skills. It's
Mm,
not enough to just say I'm a senior software engineer. What type? What's your stack? What are your tools? And LinkedIn doesn't get that specific.
mm.
So Scaffold is built with those types of things in mind to be a more modern digital, you know, resume and you know, job seeker platform.
Yeah. One more kind of cautionary tale along the way is so we mentioned earlier that you got a partner in Unicorn, and that
Hmm.
partner ended up having a problem along the way, which affected the viability of the business. So tell us that story.
Yeah, it's a tragic story. It's one that is actually still even relevant to this timeline. As of last week, I had my like multiple business accounts frozen from this fallout. So I'll start
Oh,
I'll start from the
it's,
beginning and bring
it's
it forward.
not in the far distant future past then. Jeez.
No, still relevant. This is the echoes and ripple effect
Mm,
of you know, bad choices. I've always struggled to be you know, in the driver's seat alone. I always want at least somebody riding shotgun with me, and I gave freely to a friend that I knew wasn't qualified to run a venture with me, but I trusted him as a friend. We had a very successful couple of years. We were calling it, you know, it was still Unicorn. It was kind of our second edition of Unicorn, and we did really well 21, 22. You know, a couple million in revenue. We were paying ourselves well, and I'd call it a death by success. That ultimately led to he had made more money than he kind of ever had in his career, and all at once. And that led into he invested it into NFTs, which were all the rage at the time,
mm,
um, which then led to, you know, net worth going to zero very quickly. And then
mm,
I think that the shame and the guilt of that, he poured in then his life savings to try to recover, thinking, "Oh, I'm buying at the bottom." Problem with NFTs, you know,
mm.
and the irony of not asking your dev partner, you know, who knows tech really well, who can
Right.
tell you the problem with NFTs. He just buried it, and because he buried it, it led to a bankruptcy, which then
Mm,
affected me. It was his personal bankruptcy, but you know, I had to negotiate with the bankruptcy courts to buy his half of the business.
mm,
That you know, the one that's most recent is, you know, states that, you know, he hasn't paid taxes on, you know, for 3 years now. You know, it's just like they're trying to come
mm,
after the business, and
mm.
I have to like. So by default, they get to just send a letter to the bank, freeze all your assets, and then you have to go prove why they
Yeah.
can't do that. You know,
Oh,
so
jeez.
it's a pain. It's
You
heartbreaking
seem
more
so
than anything.
positive in spite of what you're describing as being so painful. Yeah.
Yeah, I mean, always look on the bright side and, you know, all that. There's a silver lining. I, without doubt, have learned more from failures, and I categorize them as failures. I was sharing with you earlier. I heard, I always loved I think it was Bezos, you know, coined the fail early, fail often. And
Yeah.
then somebody shared with me because I used to quote that all the time until, you know, I fell out of love with Bezos. But I quote that all the time. And then somebody added that they were like, look at, you know, Will Smith's TikTok. He said, fail early, fail often, fail forward. And I
Mm.
realized those were things that I was always like, I wish I could have said it that eloquently from the beginning of my career to now, because that's what I've been doing. So as I look at this, I just look at it as like a linear progression of like, now I'm just constantly moving in this very forward, positive momentum, regardless of the failures.
So, about to wrap it up, but second to last question. What is something that you are excited about now of all the different things that you're working on?
Positive impact. I think, again, I won't go too political, but I think when we experience turmoil and when we experience divide, that's a calling. That's an opportunity to find solutions together. I'm very passionate about just impact businesses, impact statements. To quote my mother, "Be the change you want to see in the world."
Mm.
And you can channel all of that bad energy, bad juju into something really productive and really positive. That's what we're doing with all of our ventures. I don't think we'll ever have an interest in something that's just a money play or just a, you know, it's got to be holistic or nothing at all. You know, it's got to be impactful.
I'm a big fan of practicing gratitude, and so I give this space at the end for guests to express any gratitude that they have, particularly looking for like peers, contemporaries, maybe mentors who've been through different ups and downs with you, and maybe hopefully are still there with you. Anyone in particular you'd want to shout out and thank?
What comes to mind is it'll be a pin of that company Room 214 I told you about that I was fired from. Jason and James, the two founders, fast forward all these years, and I was given the opportunity I was just reaching out with gratitudes to Jason, just saying, all those years, I don't think I ever thanked you and told you that you were such an inspiration and mentor to me. And that led to an opportunity to help, Jason and James find an exit for their venture, which is still, in its infancy right now. But now instead of, where I was once an employee, I'm now, kind of an equal to, and I just feel honored and privileged there. So people really, I think my gratitude is they come to mind immediately. My partners, obviously, but I'd say there's an unnamed individual out there that I forgot to say thank you to. And my gratitude is that person. And I hope it dawns on me and I wake up one day and pick up the phone and call that person. Because I think we just forget sometimes how many people got us our successes and got us wins. And yeah, so
that's a great answer. I've never gotten that answer before. But I think that's a very creative answer. And, I too recently had a conversation with someone who I interviewed on this podcast maybe 13 years ago or something like that, maybe a little less than that, maybe 10 years ago. And I've told many other people over the years how impactful that interview was because it just gave me an epiphany and an idea and a new focus and a new energy, but I'd never told him. And so we reconnected and we were on a call and I said, I've never told you this, but do you realize how impactful that interview was, that conversation we had was? And it was, clearly moving for him to hear that. And I'm really glad that I was able to do that. So I totally agree. Take the time to reach back out to people that had an impact. You probably know who they are, and you probably haven't gone around and done that and told them that. So I think that's a great idea. Clay, where can people go to learn more about you and check you out and maybe reach out if they have any questions?
Unicorn.Love, Love, and Clay at Unicorn.Love.
Excellent. Unicorn, Clay, thanks so much.
Yeah, appreciate it. Thanks so much, John.
Thanks for listening to the Smart Business Revolution podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.